Hey, what's going on YouTube? Welcome back to Tech Conversations. I'm your host Guillermo. It is September 23rd. Hope you're all having a great day today. As you can see, another green day for me in the market, up $300 today, almost 0.3%. So we'll see what the rest of the day brings us. Now in today's video, I want to talk about another very cheap options trading strategy that can net you some really big returns. And before I get into the strategy, all I ask is that you guys hit the like button down below and subscribe, guys. It really helps out the channel. Now let's start by talking about our goal here. Our goal is going to be to profit from neutral stock price action in the underlying stock with limited risk. All strategies I ever show you have limited risk. I will never show you any strategy that has unlimited risk. I suggest you stay away from those strategies, especially if you're a beginner. Now, the appropriate market forecast for this strategy then, since we want to benefit from neutral stock price action, the forecast will be neutral most of the time. However, you can construct this to be slightly bullish or slightly bearish, and that's going to depend on the strike prices that you choose for these options. So the ideal stocks you want to use for the strategy in are stocks that trade sideways, that kind of stay within a defined range. In other words, stocks with low volatility, okay? Now for this video, I'm just gonna again go through a random situation here, a random example, and I'm gonna go ahead and go to ticker symbol SKLZ, which is going to be scales. And again, this is just an example, so don't copy this exact same trade. Now with skills, at any point could literally take off, go up 20, 40, 50%, right? Probably not the best stock to use this for, but if we do look at skills, it hasn't really moved much for quite some time now, right? And so let's go, actually before we go into the options, two things we need to check here first. Number one, we need to check commission fees, okay? Why? Because with commission fees, we are opening and closing multiple contracts with this strategy, and there are some brokers that have some pretty big commission fees. These commission fees can eat away at a lot of the profit that you're going to make from these types of strategies. Now, Robinhood doesn't have any commission fees, so we don't have to worry about it on here. But again, check your broker that you're using, check what the commission fees are, make sure risk to reward ratio is still favorable after taking those commission fees into consideration. The other thing we need to check, of course, is the ex-dividend date. If the stock has a dividend. Why? Because we're going to be selling some options here. Anytime you sell options, there is risk of assignment. Early assignment is generally related to the ex-dividend of a stock. And so skills doesn't have a dividend, okay? So we don't have to worry about it. But if, let's say it did have a dividend, we could go over to a website, for example, like nasdaq.com, and we could search when the ex-dividend date is. So for example, if I was using Apple, I could come in here, search Apple, find Apple stock, click on it, then on the left here, go to dividend history, and then I would go ahead and check when the ex-dividend date for Apple is. So as you can see, the last ex-dividend date was August 6th. If we take a look at the history, we can see that the next ex-dividend date will be somewhere around the first week of November. So we don't have to worry about it for next week. So that's the very first thing you should do before taking a look at the options. But now that we've taken a look at that, we can go into the options for this stock here. So let's take a look here. So the first thing we need to do here is choose a proper expiration date, okay? Now, when it comes to the expiration date for this strategy, my personal opinion is that the closer, the better. Why? Because again, this is meant to be more of a neutral strategy. The farther out expiration you choose, the more time there is for something unexpectedly to happen in the market that could cause this stock to move a lot, right? Either up or down. And so I like to keep it as close as possible. Now, I'm not going to just do September 24th because that's just one day. We probably want a little bit more than that, but October 1st, the next expiration date after that, to me would make sense here. And then I'm going to go ahead and I'm going to go over to the puts because this strategy is going to involve using only puts here, okay? So here we are on the puts. We have our expiration date chosen. Now, here's the hardest part about this strategy, okay? The hardest part is you need or you want to determine what price you believe this stock will be at on the expiration date. So what price do I think Skills will be at on October 1st? And let's go ahead and let's just pretend that I think Skills will be at 1150 on the expiration date. So what I'm going to do is I'm going to go ahead and I'm going to start by selling 3 put options at the strike that's closest to whatever price you came up with. And I said 1150, so I would sell 3 puts at that strike price of 1150. So I'd go ahead and click on here. I'm selling 3 of these puts. For each put I'm selling, I'm receiving 60 cents per share. Remember, each contract controls 100 shares. So I'm getting $60 for each put I'm selling, and I'm going to sell 3 puts. So I'm going to get $180 for selling these 3 puts. And again, I'll show you how to change the amount of contracts that you want to sell or buy here. But now what we want to do here is we want to go back to buy. Now we're going to buy some puts. Now we're going to go up 1 strike from the puts that we just sold. We're going to go up 1 strike and we're going to buy 2 put options here. Okay, so I'm going to click on here. I'm buying 2 of these. So I'm paying 90 cents per share. Again, $90 for each contract. I'm going to buy 2 of these. So I'm actually going to pay $180, right? Again, I'm getting 2 of these. So that's actually going to cancel each other out, right? Because I'm getting $180 from this, but I'm paying $180 for this, right? Now, though, we need to go back to the puts that I'm selling. I'm going to go down 1 strike. I'm going to skip this one, go down 1 more, and finally buy 1 more put option here. So I'd go ahead and buy a put here. Now what I want to do is I want to come back up here. I want to go to custom because remember, we want to sell 3 of these puts and buy 2 of these puts. So go to the 1150, the ones I'm selling. I want 3, and then go to the $12 strike one. I want 2 of these, and this is what it would look like here. So this is what it looks like. So we're basically, as you can see, risking $18 to potentially make $82 here. So this should be implemented for a debit, right? And as you can see, it's going to cost us $18 here. So this is going to be a debit. Make sure that it's a debit. That's how you know you're doing this correctly. Now, our max profit here, right? Obviously, this tells us our max profit, but if we want to quickly figure out our max profit, what we do is we take the 2 lowest strikes, which is going to be the 1150, the 1050. We take the difference of them. So 1150 minus 1050 is 1. Multiply that by 100. That's 100. And then we subtract the total cost, which is $18. 100 minus 18 is going to be 82. So that's how we can quickly figure out our max profit if we didn't have this here. Our max loss will be what you're paying to enter this trade, the debit that we're paying, which again, as you can see, is going to be $18 here. So as you can see, we're risking $18 to potentially make $82. That's a really nice risk to reward. This also tells us our break-even points, right? So on the bottom, it's going to be 1068. On the top, it's going to be about 1190. And again, you can adjust these strikes to make this a little bit more bullish, a little bit more bearish. It really depends on what you think this stock will do. But as you can see, for the most part, you do want this stock to trade sideways, to be neutral. You don't want it to move a whole lot. So this is the long Christmas tree spread variation with puts. So this is a variation to the regular long Christmas tree spread with puts. And in fact, here is the regular long Christmas tree spread with puts. So as you can see, there are some differences here, right? For example, so, we're still making the max profit at 1150 here. Similarly, we're making our max profit at 1150 here, but break evens are going to be different. So 1060 to 1190, 11 to 1237. Profit loss is going to be a little bit different, right? There's going to be some, differences at times. So these are things you should always check, right? But they are a little bit different, as you can see there. But again, this is the long Christmas tree spread variation with puts. So let's go over the option strat here. Let's take a look at what this visually looks like. So you should always be using the option strat to visually see what your profit loss will be depending on what the price of the stock is, depending on what date it is. And you should use this prior to entering the options trade. So let's go over to optionstrat here. So here's the optionstrat. Now they don't have this Christmas, tree spread calculator anywhere. So we're just gonna start from scratch. So I'm just gonna go over to long put here. We'll just start with this, okay? So let's go ahead and let's go to our stock here first of all. So skills, we'll go to skills here. Remember, we're choosing October 1st as our expiration date. And so we started by selling a put at the 1150 strike, right? And so what I'm going to do, so I'm going to go ahead and do 3 of these. Like I mentioned, we want to sell 3 of them here. Why? Because that's the price that we think skills will be at on expiration. Then we went ahead, we bought 2 puts right above that at the $12 strike. So I'm going to go ahead and do 2 here. And then we're going to buy 1 more put. And this one was, we went down 1 strike from the put we sold. We skipped it. We went down 1 more strike. We went to the 1050 strike, right? And this is what it looks like here. And then this is a very wide range. Skills probably won't move that much, but let's go more like this. So it's a little bit more accurate as to what it would look like. So again, as you can see, this is a debit. We're paying a debit $14 to enter this trade. That's also going to be our max loss here. Max profit, $86. Again, we can quickly find that by doing what I showed you earlier. And then it gives us our break evens on the expiration, which would be 1064 to 1193. So you have about $1.30 range there to break even. And again, these are some pretty big profits. Now, again, what do we want to happen on the expiration? We want on expiration for skills to be at the price of the strike of the puts that we're selling, right? So we want it to be at 1150 on the expiration date. So if we take a look here, that's where we're going to make our max profit of $86. And if we take a look here at percentage of max risk, these are some pretty big returns, right? 600, 500, 400, even 200% returns. Those are pretty big returns. And as you can see here, you don't have to wait until the expiration to collect your profit. You can certainly close out of this strategy before the expiration date and take your profits. For example, if it's, September 29th, right, and it's at 1150, according to this, you'd be up around $20. Right? Go ahead and close it out. You can just take your profits. You don't have to wait until the expiration. Of course, one more thing that's always important, take a look at how changes in implied volatility will affect the strategy. And we have a slider down here that can show us that. So if implied volatility starts to go up, here's what's going to happen. If implied volatility starts to drop, here's what's going to happen. And then, of course, you can always reset it to what the current implied volatility looks like. So anyways, again, this is the long Christmas tree spread variation with puts, variation to the regular long Christmas tree spread with puts. If you have any questions about anything I just talked about, feel free to leave them in the comment section below. Check out the Discord, link to it in the description below. Hope you enjoyed the video. Let me know what you guys think, and I will see you guys next time.